Hello, beautiful moms and entrepreneurs. My name is Charisse Walker, and I'm your host of the Unbreakable Mompreneurs podcast. This is a place where we come together to learn, grow, and inspire. So sit back, relax, and let's get started. Hello, Unbreakable Mompreneurs. My name is Charisse Walker, your host, and I cannot tell you how excited I am to have Carlotta Thompson in the house because she is a tax strategist and a mother. Did you say 5 or 7?
7 businesses.
Okay. Businesses and 5 kids.
3 kids, 7 businesses. Yep.
I don't know why I was thinking that. Okay, well, still 3 kids, homeschooling, while running a massive amount of businesses that are very, very successful. So Carlotta, I'm going to let you introduce yourself, but if you're listening to this, we're going to talk about tax strategies. So without further ado, why don't you introduce yourself?
So, well, I'm Carlotta. Nice to be here today. I love these kinds of podcasts because usually I'm on financial podcasts, but I love being on the moms groups because that's really where I started. I actually started in business when I was doing ministry. I do a ton of ministry and I was helping some girls I was ministering to make money. And I was like, you can make money doing anything. And I started a little business online, like selling jewelry. And the reason why I chose jewelry was because I do not wear jewelry. So it was like, I'm telling you, you can make money doing anything, even if it's something like you have no desire to do. And so that's how I kind of started learning about online business. I was an IRS agent at the time, but how did I get to be where I am with being a tax strategist and all the things? So started studying tax law at 14 when the IRS used to send out the little pamphlets that told you how to file a tax return. For some reason, I got one in the mail. My mom had passed away when I was little, and so we had to do a tax return for me. And again, came from a very, very poor family, but we still had to do a tax return because I was getting some retirement benefits where my parents were. Anyway, so the first interaction I had with the IRS was this booklet that told you how to prepare taxes. So I thought the IRS was an education company and they wanted to help everyone pay less taxes. And I come from a background of broke entrepreneurs, like barely making ends meet. You know, we weren't allowed to watch, we didn't have cable or anything like that. We weren't allowed to have the air conditioner on, but on Sundays, really very humble, beginnings. And so anyways, but my parents were so terrified of the IRS all the time. And I'm like, why are y'all so scared of them? And they were like, well, read this and you'll understand there's so much you have to do. And when I read it, I was like, this just sounds like a whole bunch of deductions to me and a whole bunch of strategies that you could do. And at the time I was just like, this is so much, they're going to give you so much money back. Like this should be a treasure hunt of information. And so that's how I've always looked at the IRS. So I knew that's what I wanted to do with my life. Went to college. I became an accountant. I knew I wanted to work at the IRS, but I had to go through 2 years of public accounting before I went. So worked at the largest firm in Arkansas, working with some of the richest individuals in Arkansas. And then I got the call to go to the IRS. And when I went, I thought I was going to get to change the lives of small business owners. I thought I could teach them how to pay less tax because that's how I looked at the tax law. And when I got there, I realized, well, my job is actually to audit them. And the IRS's love language is documentation. And most business owners don't have documentation. And so I would spend the whole audit and I would be like, okay, listen, I know this is going to end in a large tax bill, but try to look at this tax bill as a consulting fee. And you just got, a year with an IRS agent that you got to ask all your questions. And I would always do strategy with them. I would say okay, you didn't do it this way before, but think about you could do this, you can do that, you can do this. And so that is how I got started. And so I became an IRS agent and thought I would be rolling out of there in a body bag one day because I loved it. Thought I would never leave unless I was deceased. Okay. And so I loved it. And but I realized I was running a lot of people's lives and I couldn't seem to get in front of it. I started a ministry at night helping business owners pay less tax because I'm very much a person in ministry. And I was like, God, why did you give me this calling if I'm not able to help people? And so started a ministry. And I just could not seem to help, feel that thing within myself of okay, I'm really doing what God's called me to do. And so I left the IRS and that ministry became my business. And this business actually started as a ministry, did not get paid for it, didn't do anything. It was kind of like, you know how Dave Ramsey like does the budgeting things? Well, I did the tax stuff at the church and like helped business owners at the church with their taxes so that they could tithe more and give more and do more. And so that's how this came about.
That's amazing. And I love that you were so at such a young age. You're like, well, it's education, because I really do think it's a perspective and a mind shift. And I love that you went into the business owners and said, this is your consulting fee. Now, 140,000 or I mean, whatever.
Whatever the tax bill was, because there was always a lot.
Find when you were auditing that what are like the worst things that business owners, the recurring things that business owners were getting in trouble not doing?
Yeah, they just don't keep their documentation and they have an accountant that's scared of the IRS. Like that's the biggest thing. If your accountant is scared of the IRS and they don't know how to give the IRS documentation, like you can recreate documentation for an audit, but if your accountant's like just disallow that, it's fine. Like, and you're working with that accountant, you can't make the accountant recreate records. You can't make the accountant, do those things. And so that's what I found was the worst, was like obviously the business owner didn't have the documentation and the accountant just didn't understand the court cases and the rules, like the Cohen rule of where, oral documentation is accepted within the IRS, or that, what can suffice as a receipt, like those things, because, if you didn't have it and you press, like the accountant would just be like, oh, it's fine, just disallow it. And I was like, you're just being lazy, But what are the things that they don't do? Like number one, no one had a mileage log. Okay, that's crazy to me that no one had a mileage log, because people think like even if your business is 100% business use that you don't need one, but you have to have a mileage log, period. Even if you're 100% business use, you have to have one. And so what I do on my phone, I put MileIQ. It's the best app in my opinion because it works in the background. Like QuickBooks has one, but it kind of turns off sometimes and it's finicky. MileIQ stays on all year long and it's just there. And it is tracking all of those miles. And so if something happens, like I can just pull out my log and be like, okay, this is everywhere I went. And it's off GPS location. So I don't have to be like, oh, I went to the post office. If the IRS asks, I can just be like, oh, let me pull it up and I can see what that address is. So that's number one. You always have to have a mileage log.
Hey,
but also, okay, sorry.
No, I want to ask because I have been keeping one forever and I gave it to him. And then my accountant said recently, well, it's either mileage or something.
Yeah, so it's mileage or actual, but either one, you still have to have a mileage log.
Really?
A lot of people don't think that. They're just like, a lot of accountants. But no matter what, you have to have one, no matter which choice you go with.
Interesting. Okay, keep going.
All right. So, but also mileage is one of those things that most people miss on their tax return. People think that overall, it is one of the things that are used too much, but it's actually, there's either one extreme or the other. Lie about their mileage and make it up, or people forget to put it on there. So if you're a stay-at-home mom, but you're working, you have mileage. Think about all the trips you take to the store to get your little notebooks, or to the post office, or to the bank. But also think about, how can I get mileage? How can I get a business expense? So if you have to go somewhere, go from your house, go to the post office first, then go to your little sports event, then come home. And that way, when you're driving, it's, like we live 15 minutes from town. When we're going to if I go to the post office first, the trip from here to the post office is mileage, right? Mm-hmm. And so just making sure that you quit asking, is this a deduction? But how can I make this a deduction? How can I make this trip a deduction? How can I make, this vacation a deduction? How can I make this thing I want to do a deduction? And that is the biggest gap in people deducting things correctly, is that not even correctly, like they just don't take as much as what they could in a lot of circumstances, because they don't understand that they could deduct something. And when you're in an audit, kind of too late. If you start bringing up expenses that you had, yes, we will look at them, but we're going to be like, okay, we're going to be a lot more scrutinizing of the documentation because you didn't put it on the tax return. And we may be thinking like, did you make this up? Why did you come up with these things? Why are they not on the tax return? A lot more questions going on when you're in the middle of an audit trying to see like, say like, I didn't deduct all these things I could have deducted. So documentation, 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 can't say it enough. So mileage log, number one. Number two, if you go somewhere for travel or meals, you have to have the receipt. A credit card does not suffice. You have to have the receipt.
Really?
Yeah, so for travel or meals, you have to have the receipt. Now, should you not take those if you don't have the receipt? It's always a gamble. Like, take it. If you lose it in an audit, the chances of being audited are like very, very slim, especially right now, because the Trump is like literally trying to do away with the IRS. But I mean, it will swing the other way eventually. Just from today forward, just remember, like, keep up with your receipts. If you're going for a meal, on your meal receipt, you have to write down who you were with, what was the purpose of the meeting. It has to have a itemized of like what was purchased and obviously the date. And then on travel, like if you stay at a hotel or anything like that, you have to have the actual receipt. There's very few things at the IRS that you have to have an actual receipt for, and those are two of them. And then you have to have the log. Now, what else can you keep? So like say you have receipts for all the things that you're doing in business, or maybe you bought something at a rummage sale and you couldn't get a receipt, right? Just jot it down on a piece of paper and tell the amount. See, that stuff you don't have to have a receipt for. You can just jot down on a piece of notebook paper, okay, I bought this desk on Facebook Marketplace for $100 and write that down. But the things that you do have to have receipts for are travel and meals. All right, so use your credit card receipts otherwise. But if you're going to like Walmart, Target, those kinds of places, make sure you take your phone out, take a picture of the receipt right then, and you'll have it in case you need it. All right. So the reason you don't have to have receipts for those things, but in an audit, if you have expenses for Walmart or Target or whatever, they're going to ask you what you purchased there. And if you can't remember because it's 3 years later, they're going to disallow that expense because you could buy anything at Walmart, right? Personal or business. It's not the same as like if you had a charge at, let me think of a place like at the plumbing store, and that's really all you can buy. There's plumbing stuff, and it's for a house. Like it's definitely different whenever it's Google is business, right? But Walmart, you don't.
Interesting. So I'm in trouble. Knock on wood. Get me through a couple more years.
Yeah, just hey,
Or like
from today's forward, just keep the right stuff. Yeah.
I thought that, every time I go through my entire credit card and here's all the expenses, I know what it was for. And I do have, like, in fairness, I do have manila folders that like have all the receipts, but
well, hey, that's all I have too. Like if I get audited, it's definitely going to be a lift on my team to pull all that stuff, but as long as you have it, right? And then also, if you know what it's for on your Excel sheet when you're putting all that stuff in or in your QuickBooks, just make a note, because 3 years from now you won't remember. You might remember now, but it'll be hard for you to remember 3 years from now.
Okay, so I want to quickly get to something I learned last week or the week before, and I'm like dying because Marketplace, the health insurance when you're like self-employed, for the last 5 years, it has been the best thing ever. Like, I'm like, why? I'm never going to get a job with a company because their benefits are horrible. Marketplace has been fantastic. I know I never thought I'd say that, but it has been.
It's good.
Now, all of a sudden, this year, for last year, we ended up paying out the wazoo. And I'm like, what the heck happened? And then this year, I know I'm in trouble. And next year, like all of a sudden, it's gone from like not paying every month to $2,700 a month. I don't know how we're going to do this, right?
Yeah, because it's income based. So your income must be going up.
Well, yeah. And that's why I'm in trouble. But my point is, I need to figure out how to get a tax. Like if I have to go buy $100,000 vehicle, which I swore I would never do in my life, or short-term rental. So the big, beautiful tax bill, I learned section 189, right? So I'm currently looking at short-term rentals that I'm going to put into service, like they're turnkey ready to go. But are you familiar with that? And
we have those. Yeah. So we have short-term rentals that are ready to go, but also, if as long as you can close on it before the end of the year, that's the biggest thing. But if you can't, like there's a lot of other things as well. Right now we have some oil and gas things going on where it's the same thing, right? You put in $1, get about 95 cents deduction on it. And you don't have to be active in oil and gas. It's one of those things that has like a carve out in the tax law. So if instead of going to buy a $100,000 vehicle, you could buy a $100,000 oil and gas investment. Now, I'm not a registered investment advisor, just telling you the tax effects. The tax effects are $100,000. A lot of them put off intangible drilling costs. So the intangible drilling cost is what you get to deduct up front. And a lot of times you can get those 90 to 95% of what you put in. So if you put in 100,000, you could get a 95,000 write-off, and then they start producing income next month, right? Or next quarter. So really fast return on investment if you can't get the short-term rental done. I love short-term rental. Again, we have a turnkey short-term rental at our location as well. And there's only a couple companies in the country that do those. And then we also have these little boxable things that are deployed during like hurricanes and stuff like that. They have actually a 5-for-1. So you put in $1, you get $5 back in deductions the first year. And they are so like I think the minimum on those is like 70,000. So you put in 70,000, you get 350,000 in deductions, but you just get to roll it forward. So if you don't use it all. And it all brings your AGI down so you don't have any taxable income. So then when your health insurance is zero.
How do you get to, like, I need to know that one.
So we do that at our company because that's what people are looking for right now. So we do a lot of strategies. We do personal strategies where it's like rent your home to yourself, pay your kids, all those things. Then we do business strategies.
Yeah.
And then we do what we call these are family office style strategies. And these are for the wealthy that are like, okay, I'm in a pickle. I've got to get down to zero. What are some things I can do for the end of the year? And we just actually went over those on our year-end clock because there's still time. But I think that the boxes cut off next week. We also had a solar deal and it could carry back 3 years, whereas most things can't carry back. Like solar is the only thing that can carry back right now. So if you had taxes in 22, 23, 24, really good to do the solar. And then we also have some leveraged charity. And you have to be careful with all these different types of strategies. Okay. We probably get pitched 500 strategies and we take 4 or 5 of them a year. And that is because it has to hold up. It has to be able to hold up to the IRS. We have, like I said, 4X IRS agents and a tax attorney that are my employees. And we just make sure that everything is going to pass all the tests. But oil and gas is the most black and white thing you could ever imagine because it's been around for hundreds of years, right? And they just have a lot of people on the Hill that love them, right, at the Capitol. And that means that they have a carve out for that in the code and they get great benefits. But all those things are better than buying a vehicle.
Well, yeah, because the vehicle is depreciating asset, and I don't want to spend $100,000 in a vehicle. Like I'm having a hard time spending even $50,000.
Because it's like people are always laughing at me because I drive around like a crappy vehicle and people are like, Carlotta, you're the wealthiest person in our town and you drive that. And I'm like, I wouldn't be wealthy if I did what y'all did. Like I wouldn't be wealthy if that was my life. We lived in a tiny house with 5 people and 400 square feet until we started our businesses and were able to buy real estate. And people, my real estate was always better than what I lived in. People like, why are you not living in one of your rental properties? I'm like, I would never be wealthy if I did what everyone else does. So I always go against the grain. And so I will always drive vehicles that have 200,000 miles on them. I'm like, I just can't bring myself to buying a $100,000 vehicle when I know I can go put this into some kind of investment or business that's going to give me a lot more return on investment and the deductions to go with it.
Wow.
I know. You're just like, wow, that's a lot. What do I ask?
I'm always thinking about new businesses, and I'm thinking like with you, I mean, just the gold that you've given so far, because I know about the Augusta rule.
Right.
I know about renting your house out to your business. I like those things, but I had no clue about the oil and gas or this box thing.
Yeah, they're all just specific
crazy.
They all come out. Next year, we're going to be bringing a lot more as we are able to review more. Since we have more people, we can review more of those deals. And people know that Carlotta doesn't play. Like, don't bring her some crappy deal that's not going to hold up, because I'm going to look at it with a lot of scrutiny of like, okay, is this going to pass any test at the IRS? Because these family office deals, a lot of times they come from attorneys. All right. So they're going to be like investment type things or put your money here and they cost you something. All the other strategies we do, don't really cost you an investment. It's like you just forgot to do it, right? You didn't know you were eligible for this credit, or you didn't know you were eligible for you didn't know you were eligible for WOTC, which is Work Opportunity Tax Credit, or disability credit, or small business health insurance credit. You don't know those things. So you did it, but you just didn't get the deduction. But now these family office style strategies, they're going to be from the wealthy. They're going to cost you an investment of something. And usually it's going to be something in a new business model or a business model that has been around, like the Boxables. I think they've been around for like 5 years. But these come directly from the manufacturer. So that strategy comes from the manufacturer of those businesses, and they're trying to find investors. And they're like, okay, instead of us taking the depreciation, then we're going to give this to you. And the way this deal works with the boxed housing is it goes through a trustee. So usually you would have to get 100 hours to be active in the business. But in this situation, the trustee gets your hours and it comes through a trust. And then it's a grantor trust, so it goes on your tax return. It's the most genius setup I've ever seen out of any of these strategies. And when I first looked at it, I was like, oh, that's not going to pass. And I went because I pride myself in knowing trust tax laws too. I mean, I worked in Arkansas in a trust side of a big accounting firm. So, but I did not know that your trustee could get your activity for you. So very cool. Anyways, I say all that to say there is a ton you can do. Don't just focus on short term. I love short term real estate because it is your house and you get to do it and you get but you're going to get the big deduction, but you're going to take out a big loan too. Now, you don't have to manage them after the first year. So, what our strategy is on the short term rental, you purchase them in the first until December 31st. You have to rent it one time and you don't manage it during that time. And then in January, you turn it back over to the management company. So, our guy is the management company and he's the seller. So you'll manage them through December 31st, then he turns them back over. So you're not having to manage anything. He's doing it. It's totally hands off after December 31st. So you get your big deduction this year and then you turn it back over.
Okay, you come across like what I love of when you first sat down, you're like, okay, you're getting the mom because this is it. And I'm like, yeah, I have my sweatshirt. I just changed my shirt.
Getting the mom. If you haven't heard my son up there growling, and I'm like,
I haven't. But you come across like this sweet lady, but you're a fire. Like you have so much knowledge and so much wealth and so much value to offer people. Like, oh my gosh. So do you help people like in all states or do you just
Yep, we do have all 50 states. So the thing is, we help clients that are making $40,000 a year to making $40 million a year. So depending on where you are in this, right? Like you may come to me and you be like, okay, I just started. Like, what can I do? I'm making a year, still small. But the cool thing is, we have people that we've taken from making a year. And you remember before we started, I said we do a lot of business acquisitions and real estate acquisitions. We had someone, and now we help them buy a business, and now they're making over $1 million a year. And that's just happened in the past year. So they came to us making 100 and now they're making $1 million, and all because of a strategy we taught them. And now they're expanding that business. Like we teach operations, we teach how to make your business run absentee. There's a lot going on at the company. I mean, it's amazing what we're able to do. But like we teach wealth, we also teach tax strategy because I believe like if you're on the journey to making more money, you're also, or if you're on the joint journey to paying less taxes, they go hand in hand. The billionaires literally give you the roadmap to make the most money and pay no taxes. Like, I don't care if you like our current president or not. He literally said in his debate with Hillary Clinton 10 years ago, paying no taxes makes him smart. He's got it figured out. And all I do is I go to the code that's written by Congress, which is backed by all the billionaires, and I go see what are they like. Right now, they're loving private equity. You can actually exit your business tax-free in 5 years and pay zero taxes on it. So if you have like a daycare or a sign company or a, real estate company or whatever it is, you can exit that business and pay zero taxes 5 years from now. if you set it up correctly and you do it how they want it done. You just have to do a C Corp, you do a 1202 election. Like it's all the things, right? It's amazing. But people don't know you can exit a business tax free in America. Like that's foreign language to people. But why is it there? Private equity companies, that's what they want, that's what they do. And a small business in America is considered under 75 million in assets. To us, that's not a small business, but to the government, it is.
I'm so excited to talk to you more after this because I know that our time's up. But I want to talk about really quickly, you built this empire and you've helped people build an empire, and you're also homeschooling your three children. So how are you juggling that? Like what do you do to be able to give yourself the time to be able to homeschool your kids?
So I also want to throw another wrench in there. I struggle with bipolar depression. So that means I'm on 3 weeks a year or 3 weeks and then I'm off 6 weeks, or I'm on 4 months and then I'm off 3 months. Okay. Very hard when you're running 7 companies. So how do I do it? I have the first thing I did when I left the IRS, because I know I struggle with this and I know I will go to bed for 3 months and you won't hear from me, is I hired somebody as soon as I started. And that person in the disc profile, like I'm dominant, she's stable, right? So she's an S and I'm a D. And so she's always on. Like she's always stable. She's not me. She could never do what I do. But when the clients are calling and she was like, she was stable. Like she took care of everything. And that was my first, that like I hired someone before I could ever even get started. Good. And so now I have a team of over 40 people and they all know that about me. I run everything from a boardroom style. I'm absentee in all the businesses, meaning like I don't have to be hand in hand in them. Everything runs through processes. Everything is like, if you come to our company, you're going to get XYZ. Every single client gets XYZ. And the way we determine that is it doesn't matter if you're the person that's making 40 million, you're going to go through the same thing. Okay, do you qualify for this strategy? Do you qualify for this one? Every single one of them down the line, like oil and gas, do you have $25,000 to deploy? Well, if you're making 40,000, your answer is going to be no. If you're making 40 million, you're going to be like, oh yeah, I got 25 million to deploy. But every single person's done the same exact way. And I just make sure that everything has a process, a time, and I am involved. If when I am on and I'm helping with operations, I'm helping with the business, I'm helping do everything. But when I'm off, I'm hanging out with my kids and like really secluded into my house. I'm a recluse. But I think that is how I've done it, is I build people around me and I live way below my means. So whenever I was starting, I gave my all the money I made to someone else. I lived in a five people and 400 square feet. We lived in a camper at one point. Like we did everything from a place of scarcity because I knew this may not be forever. I may not, like I want to continue this business forever. But that first year, I was like, if I go down and I'm not able to get this work done or whatever. So I made sure that no work at the company relies on me. So when my clients see me, it's like a breath of fresh air and they love me and they're like excited. And I'll spend, like, we've had 3 Carlotta-thons, we call them, this month. And I've spent 6 to 8 hours on the phone with clients and I'll just answer all their questions. And we just go for 6 to 8 hours. But then they may not hear from me for a couple of months, but that's okay. Because they're like, when they get it, they're like, you throw so much gold and your processes are so great. And I have the most amazing team. People love it. So I would say there is not a balance for me with dealing with all those things. It's either I'm on or I'm off, period. And when I'm off, I try during those times to really take care of my family and take care of the house. And when I'm on, my family doesn't get to see me as much, right? I'm just try to focus on the business during that time. But I do, like today, I'm working from home. We do have an office, but 2 years ago we started a school. We used to have a bunch of kids at the office with us. So we had like 12 kids we were doing homeschool with. So another part of our business is we start teaching kids at 7 years old how to buy businesses. So we've had a 9-year-old and a 16-year-old buy a business, but we have about 100 kids, around 100 kids that come to our event. And it's like, so then, all year long, we're trying to stay in touch with those families and things like that. So we have a lot going on, but we have a great team. That's what I'm going to say. We have a great team. I have a love for kids. 5 years ago, I couldn't say that. I was one of those people I was like, I don't like kids. I like my own kids, but not other people's kids. And now, like that's the most rewarding part of my business is teaching the kids because, I try to every webinar, I'm like, okay, take something and go teach your kiddos because they need to learn to buy businesses and they need to learn to start businesses and all the things. And so, yeah, so there's to me, work-life balance is not really true. It's just making the most of what you have when you're in the mental space to do it.
Thank you for being so honest and like you're just amazing.
Well, I don't think so, but God has definitely given me,
You have a
God's
talent.
given me the talent with the taxes. He's given me the calling and he's given me the stewardship. And what I always say, like, this isn't my business. I'm just his employee. So I try to run it like I'm his employee. And and I get down on myself because I'm like, I'm not doing good enough for God. Like, I'm not, showing up to work every day. He made me this way. He made me who I am. But maybe he did that because my team is always like, Carlotta, if you were on 365 days a year, we would never be able to stabilize because every time I'm on, like, the past month I've been on, and I've probably come up with like 15 new businesses that I want to start. And they're like, slow down, and they're like, so they let it kind of used to, we would just start a new business every time I had, every time I got manic. But now it's like they'll like let it sit for 6 months and we'll say, okay, 6 months later, is this still something we want to do? And then we'll do it. So.
I love that. So how do you find your people to hire? Because I know somebody that
Yeah, so we do a lot of everything we do here. We have a team, right? So we have a recruiter that finds us amazing people. And like people say, you can't find accountants. Accountants are so hard to find. We never have a problem finding accountants. But I'm going to also say we have people sometimes call us a cult here because we have amazing culture. The culture of our company is like people don't ever want to leave when they come. They're just like, this is amazing. They get to be who they are. They get to love on each other. They just love it. And so it's people love the culture. And so getting employees is really easy when people love to work there because your employees find your employees for you, right? Like they'll see somebody out and about. This is what I love. They'll see somebody out and about and they'll be like, oh, that girl's a hard worker. And then they'll recruit onto the company. So that's how we get a lot of people is it'll be like, oh, I got this friend that would be a great fit for this. And they'll bring them on. Like I just hired my best friend from the IRS. We were best friends from the time I started the IRS. I met her at the IRS. And when Trump went crazy with the IRS, and I'm keep saying like, please keep going crazy on the IRS because I keep collecting IRS agents. But when he did that, he took work-life balance away from them. And so she came over here and she's been an IRS agent for 20 years, super sharp, like worked in a ton of different divisions, was a very high grade at the IRS. And I'm like, you just collect the people who, and also I believe God just sends us who we're supposed to have. So, but we have a great recruiter and our employees recruit for us.
well, if people like me wanted to talk to you later,
Yeah. So you'll have a link to put in the show notes. So you'll have your own link and I just get on. So the first thing you do is get on one of our trainings because the training is going to kind of show you like, this is what we do. This is how we do it, etc. Then from that training, you can get on a one-on-one call with us. Why do we not get on a one-on-one call from the get-go? Is because we are not necessarily your accountant. You may have your own accountant that you love and we will work with them. Or you may want us to be your accountant. We work with accountants all over the nation, or we can do it as well. So that's why we like for people to know, like, okay, we're not trying to take the place of your accountant. We're not trying to do that. This is strictly tax strategy. And this is what we're doing. And this is the process. And this is a systemized approach to strategy. You can have tons of one-on-one calls with us, but every situation goes through the exact same course. Like, do you qualify for this? Do you qualify for that? Anyways. And then that's how you do it. You get on a training with us. It's with me. It's about 2 hours. And it's just like, okay, we lay out everything out. And then from there, you can get on a one-on-one call if you think it's a good fit for you.
love that. So excited. Okay. So check the show notes, right? And we will be able to connect. Any passing end of advice stuff that you have for people?
Yeah, I'm going to say the biggest things that are the biggest issues with the IRS are not usually things that you actually do. So, in closing, make sure that your NAICS code on your return is correct. And this is the code given to your company by the industry, right? And why is this the biggest thing? Because when the IRS determines if they're going to audit you, they are going to compare your return against everyone else in that code. This is the number one mistakes that accountants make. They put the wrong code, or they put nines because they don't know what your business is. But if that code is incorrect, you have a lot higher chance of getting audited than if you put the right code. So always ask your accountant what code they're using and make sure it is accurate, because you don't want to be a doctor's office getting compared to a real estate agent. So everyone always asks me, what's the biggest mistake on a return? That is what gets you to the IRS's forefront in the first place. Every return gets a score based on the industry that you're in. And if your code shows you're in the wrong industry, you're not, then you're probably going to get a higher score compared to everybody else in your industry.
Good to know. Well, Carlotta, thank you so much. It's been a true delight. So I appreciate it.
Thanks.
In Unbreakable Moms, we didn't talk a lot about motherhood today. Sorry, but it was all about tax strategies and like your business, which you need to know so that you can be more of a mom later. So really, if you're having some questions or wondering how to get started, reach out to Carlotta. And again, the link will be in the notes. And go out and make it a great day. Beautiful moms, remember, you are unbreakable. Keep illuminating the world with your strength, pursuing your dreams, and reveling in the splendor of motherhood. This is Charisse Walker, bidding you farewell for now. Stay tuned for more empowering conversations on the next episode of the Unbreakable Mompreneurs podcast. Until then, keep shining bright. Signing off with love, Charisse Walker.